Another interesting week in the markets, as always. We're going to sit down, we're going to go through that when it comes to crypto, comes to FX, the overall market, just get a good idea of what happened this week, potentially what we could see going into next week. If you're a Stats Edge Pro subscriber, you already know what you're going to trade next week because that email is going to come out to you on Sunday. It's going to have entries, exit points, a bunch of symbols to look at based off 30 some odd years of back tested data. So if you're interested in learning more, go to statsedgetrading.com, check out the Stats Edge Pro section there. We have a Discord room with a alert bot that will alert you when these symbols hit these certain prices. I have publicly on that website every month of returns going back the last 30-ish years in some cases. So you can see exactly what we're looking to trade, what the back test is, what we expect to see from these systems. And of course, I'm always working to build more systems. It's one of the benefits of being a systematic trader. The actual amount of time I have to spend trading is very, very small. So I can spend a lot of time testing and reviewing these markets to try to figure out which algorithm I'm going to lean a little bit more heavily on. First of all, right off the bat, I want to get started with this. So this is the AAII investor sentiment numbers. Essentially what we're looking at here is we are looking at an average of people surveyed and whether or not they are bullish or bearish over the next 6 months. Most time, it doesn't really matter, right? You don't hear me talk about this too much because nothing really occurs kind of one way or the other. It's kind of stuck in the middle. Nothing's really interesting. However, we are in 1 year, we are as bearish as we've been in an entire year here. And it's been increasing. So if you notice here on 01/22, we were 29% bearish, then we were 32% bearish, now we're 43% bearish. People are getting more and more and more bearish. And then you contrast that to what's happening in the market here, and the market's not done anything. It's actually tapped really close to all-time highs last week. So the fact that everyone's getting super bearish as the market's continuing higher, that's interesting to me. Something I want to keep an eye on. So I thought I would lead a little bit with that just to show you guys. But you notice here on the SPY that we're range bound. And in a lot of cases, that's what we're going to be talking about. But I wanted to start on that premise is why is everybody getting so bearish? It's because we're at the top end of the range. I think it's going to move lower. For me, when we're at these extremes, it's a fade, if nothing else. There's, you can look at the stats over time and see that when everybody gets super, super bearish, usually a good time to be buying. When everyone gets super, super bullish, sometimes a good time to be selling. And then in the middle there, you just ignore it, right? If it's just flopping around the middle, just like price action, which is right now kind of flopping around in the middle. Take a look at Bitcoin, same kind of thing. We're almost smack dab in the middle of this overall range, not too high, not too low, but we're sitting in this range. So I think what we need to see for risk assets to start breaking out is Bitcoin to get back to these highs. At some point, we're going to get a massive move out of this base, one way or the other on Bitcoin. It's just what it does. Consolidate sideways for a long period of time, big massive move. So consolidate sideways, big massive move. Over and over and over again, this is kind of what we see in Bitcoin. So until then, I'm not really trading it. I'm not super interested in it. Solana, kind of the same move. A lot of these things are the same idea. So Solana, we've got this here. Clone this, bring it down to here. Right, you can see stuck in the middle of the range, more of the low end range of Solana than anything. When it comes to Ethereum, which is kind of the altcoin space, relatively super weak and tapping down to lows today on Saturday as we take a look at this. So something we need to keep an eye on. If we want to do Euro USD, and I just want to take this and clone that, bring that down to here. So this is what the dollar looks like. In most cases, the dollar is 70% euro. So we need to kind of note that at all times. We've had this range for a very long time. And then we've broken out of the range. We've come back and tested. And so far, we're starting to drift down. This means the dollar's climbing. If you just invert this chart, as the dollar moves higher and higher, generally speaking, that's not what you want to see with risk assets. So perfect scenario here for the bull case. The dollar starts to fall back into this range. Bitcoin starts to get closer to those highs. Then maybe this SPY can break out. Till then, we're kind of stuck in the middle of a range here. So a couple other things that I wanted to look at quickly. We have COPX, which is the copper ETF. starting to bounce off support. So copper is a good, call it Dr. Copper in a lot of cases, because you need copper to build, right? Copper is one of the main things that's required in order to build buildings, to build technologies, to build. It is one of the most important metals out there. So if copper is starting to lift off of support, we're seeing some buying, we're seeing some demand into copper. That's generally speaking not a negative sign for the overall market. With that, we can take a look at China, right? Full disclosure, I own a lot of China, a lot of Chinese names, betting on this resolution of this base to be higher. And you can see we are above the anchored view app right here. We had a nice week this week where we're not at all-time highs, but we are above our most recent highs. And then we compare this again with the S&P 500, SPY, SPY. There we go, where we are below our recent highs. And then we look at FXI, we are above our recent highs. So a little bit relative strength, at least on the most short-term basis when it comes to looking at China versus looking at the S&P 500. So that's a place to look for. And that's what I'm doing a lot of time focusing on. ITA is another one. Looking at relative strength. Look at this chart. This is defense and aerospace. So we're talking a lot about Raytheon, Lockheed Martin, Boeing in some cases, and we're hitting these all-time highs and basing really, really tightly on them. So this to me is my sector that I'm going to watch very, very closely next week. Interested in buying some ITA if we can get a little bit of a breakout here. More and more on my systematic trades, I know I'm going to run my reports. There's going to be 30 symbols that are going to get popped out with entry and exit prices, all that stuff sorted for me. So as I go on my discretionary trading, more into a lot of these ETFs, just because it's a way for me to express an idea without necessarily having to look at individual names. But nice tight base at this kind of 157, getting tight across this area right here. I think some of the names that came through the algorithm were defense names, so I'll probably get some exposure there as well. Want to take a little bit of a look at IWM as well, because we need to see this rotation happen at some point, I hope, in which that IWM, which is our small caps, end up actually getting involved. And so far, let's go to a weekly chart here and zoom out. We're not really seeing that. Small caps, I generally expect to underperform anyway, because they kick out their best players, right? The SMCI was in here and then it just got booted out as soon as it got good. And then the DOJ kept cracking down. But you can see this is going all the way back to 2021. We keep hitting our head on this. I want to see a resolution of this higher, and I want to see that relatively soon, because there's only 500 names in the S&P 500, and 30% of that index is large cap tech. So when and if large cap tech kind of moves a little bit out of favor, I want to see them starting to participate in these smaller names. And if we look at, kind of zoom in and just look at this weekly's candle, we got very, very close to getting back up above these prior week's highs. Then we failed pretty miserably, right? The S&P 500 was down on Friday. IWM was down worse. So we tapped those recent highs, fell off again, range bound, range bound, range bound. If we look at a lot of these names, even ARK, see the range that we're doing here on ARK as well. So when we get range bound action, that's just means we have to kind of pay attention to that. We need to focus on that and understand that that's the case. So when I talk about how I'm going to kind of change which algorithm I'm looking at, if you take a look here, and we have 4 systems we run at Stats Edge Pro. We have a trend continuation one. And in all these cases, you can click here. You can see, this is the entire return. This is what we're looking for. This is what the equity chart looks like, all that. I'm going to be more looking at this pullback system. This is the return, right? 25% year over year growth, 25% max drawdown. Here's what each year looked like, all of that kind of stuff. But here is the idea behind it. We're looking for a little bit of a breakout on week 1. We're trying to snag a pullback and then hold that for about a week. I think this kind of trading and this style of trading is going to outperform trend following in this type of environment. Now, if you're a Stats Edge Pro member, you'll have all these symbols kind of presented to you. If not, again, just we're looking to buy dips, sell rips. We're looking for mean reversion, right? Buying support, selling resistance, that type of thing. But what do I need to change my mind where I'm going to be more interested in trend following? I'm going to be more interested in relative strength investing, which is one of our systems have there. That's simply a break to new highs. It doesn't necessarily have to be on the SPY, although that would be nice. But if we take a look at the RSP, which is the equal weighted S&P 500, not so much an all-time high break, but this zone right here. I want to see us break and clear this zone and hold above it to say, okay, the average stock is starting to move. The average stock is starting to break out here. And then lastly, IWM, this high right here, we can call it, 230. If I see that breaking on IWM, then I'm going to be more interested in just putting my money into the trend following systems. In a perfect world, I would be in trend following systems because you just buy a bunch of names, you check on them once a day. If they're still moving higher, you're holding. If they end up breaking down, you're getting on to something else. In the meantime, I need to be more active. And that's what these strategies are, both the pullback strategy that you can see here, and then the mean reversion strategy that you can see here as well, right? Here, both this basic example in the corner here, you're just looking for something that's a little bit oversold. You're trying to buy it and then again, flip it out about 1 week later. So that's what we're looking for, is we're looking for some resolution to this range before we can start trend following. So if you're somebody, for example, and that's all you do is you look for breakouts, I think this environment's going to be a little bit tough. So start to try to add strategies into your system that will deal with pullbacks, that will deal with buying support, selling resistance. At least that's what I'm doing going forward until everything that we see here that's been stuck in a range for a couple weeks ends up breaking out. So again, if you're interested in any of this, stats@trading.com. Till next time, get away from the screens and stay tuned to the channel. I'm planning on making way more videos. I've got a little bit more time freed up. I'm going to try for a video a day. Hold me to that. Call me names if I don't do it.